What is going on, guys? Today we have so much information to go over. There is so much news in the market. So we are going to touch on first SPY and inflation. What has gone on today? What has sent the market up over 2% in a single day? Absolutely insane move here today. And then we're going to get into one of my favorite stocks in the stock market here, and that is Meta or Facebook or whatever you want to call it, Instagram. They own basically every social media platform that you could ever imagine. We're going to go over the stock. We're going to take a look at the stock. We're going to take a look at a recent survey that was released about some negative news about Meta, and then we're going to take a look at where I think the stock is going price-wise based off its PE ratio, based off what we've seen in the past. So if you enjoy this video, make sure you drop a like down below, and if you want to see more videos like this one, make sure you hit that sub button. The S&P 500 moved up over 2% today alone, and that is not the only crazy thing. What is even more crazy is when we zoom out and look at the last month, we are up almost 10%. And really, if you think about over the last month, what has happened in the market, the only thing that's really come out has been a lot of earnings. And overall, when you look at the earnings across the board, there hasn't been anything overly positive about the earnings. It's more been just about people meeting expectations and the market being surprised that things have not, gotten worse and worse for these companies. So overall, the market's reacted in a positive way to this and kind of started to see, the light at the end of the tunnel. And the news that we're going to look at here next kind of just even builds more on top of that positivity in the market. And the news that came out today was that inflation only went up by 8.5%, which is still a crazy high number, but we've started to see it backtrack down and backtrack down more than we have seen ever, in the past, 6 months. So you can kind of see on this chart, inflation at 8.5%. Last month, it was around 9.1, and then we did have small dips in here, but nothing compared to what we've seen here, where we've seen over a 0.5% decrease in inflation over the last month. Inflation starting to drop is going to have a huge benefit for companies like Meta. And what that'll mean is the Fed will start easing their policy in terms of the interest rates and how much they raise interest rates. And that for Meta is kind of borderline growth stable. So it still has a lot of growth in front of it, but it still is also a very stable company with a very strong backbone in advertising, on their social media platforms. So for a company like Meta to have this positivity in terms of inflation going down, it's going to have a huge impact on the stock price and on the company going forward. We've seen the stock over the last year be very impacted by negative earnings, but as companies start getting cash and interest rates start to level off instead of continually going up and up, and companies being afraid of borrowing money, as companies are a little bit more willing to borrow money, they'll have a little bit more money in their pockets to spend on advertising on platforms such as Meta. So there is some negativity that comes along with Facebook, and that is shown kind of here in this article. And it's been said numerous times, but I'll just go through and read this real quick. So Wednesday, a survey was basically released that spoke to 1,300 US teens between the ages of 13 and 17 about their online habits, and found that Facebook usage had plummeted amongst those teens. Just 32% of teens said they use Meta's Facebook app. That's a massive decline from 71% who said they used the app in a similar survey conducted between 2014 and 2015. YouTube is the most widely used social media network amongst teens, with 95% of teens saying they use Alphabet's owned video sharing service. So overall, again, very concerning there, right? You're going from 32% of teens down to 71%. But here in this survey, they are only looking at Facebook users, which Facebook has transitioned a lot more to being a way for, older generations to connect. It's more of a formal setting because everyone's parents are on Facebook. Now, what's kind of transitioned is Instagram. Instagram has become, more of, what you could say the new Facebook, where a lot of people will be a little bit more post groups of their friends out drinking, things like that they might not post necessarily on their Facebook because they don't want their parents or whatever to see it, whatever's going on there. So Here, they actually do talk about Instagram usage. So Instagram usage only rose 10% since that 2014-15 survey. What's weird is they make the comparison in this article to Snapchat, which rose 41 to 59% over that same period. And basically, I don't think there's a really good comparison there because Snapchat in 2014, 2015 was a younger company. So they obviously have, had a lot of time to grow and grow their user base. And what's very different between Snapchat and Meta is that Meta and Facebook has a monthly user base of over 3 billion people. If you look at Snapchat numbers, they are nowhere close to that number. 3 billion people, you're talking about almost half of the world's population, a third of the world's population that use Meta or some sort of Facebook app over the month span. And that is absolutely insane. It's hard to grow your numbers when you get to such large numbers because you're talking about, again, almost half the world's population. And the fact that Facebook is banned in China, right? That's a whole marketplace that they don't have access to. So overall, they still have a huge number of eyes on the platform that they can basically drive ads to. On top of that, the numbers do not lie. So Facebook still took in a staggering 29 billion in revenue and made 7 billion in profit, a figure that makes every other social media company look minuscule. Snap, which we just talked about, took in only $1 billion in their most recent quarter and lost more than 400 million. Pinterest, with roughly half of Snap's revenue, so 500 million, and lost a little bit less money. Again, still losing money between both those companies, which is not good, especially in comparison to Meta, that's super profitable. And then down here, we talk about TikTok. So TikTok, their 2021 revenue was 4 billion, which is still 8 times less than Meta's revenue over the same time period. So absolutely insane numbers that Meta puts up, and they're still just proving that they have a stranglehold over the social media industry. Now let's take a look at some of the metrics behind Meta. So it's always good to look at the business, see how the business is doing, but then also look at the metrics and what is happening with the business and what is happening with the stock price. So what we see here and what is most important to me is the forward PE ratio. So we are seeing a current forward PE ratio of 16.16. And we can look over the past of kind of where Meta has been at in terms of forward PE ratios. So just, back in June, we saw it drop down to 13.48. So that's the lowest that we've seen. And since then, we've seen the earnings come in and they've kind of had a little bit of a rough time with earnings. And with that, their PE ratio has actually gone up. And then when we look over the past, we can see that Meta actually kind of peaked out back in September in terms of stock price, September of 2021. And that was a PE ratio of 22. And that comes kind of from the fact that they had a really good positive earnings report there, and basically that caused the PE ratio to drop down. But before that, we were sitting around a 30, and I don't think a 30 is unreasonable for a Meta stock. The way and potential growth that they have ahead of them, I think they can easily achieve a 30 PE ratio. So with that, what we can do, we can jump over here and we can take a look at a calculation of what the price could potentially be if we go up to a 30 PE ratio. So we have here the price, the current price, which is $178.34, the current PE ratio, which is 16.16, the potential PE ratio of 30, and then we can do a calculation, and basically it's just a quick ratio here, come up with the price target of $331.08. And this would be an absolutely massive return of 85.64%. Which again, I don't think this is unreasonable. If we jump back over here to their chart, we can see $331. You're kind of around where they were at before they fell off this cliff after earnings. So again, not unreasonable for them to potentially get back to some of these prices in this range. And the last thing I always like to look at is, where do analysts see this stock going? So what we have here, we have 32 analysts saying that Meta stock is a buy. We have 5 analysts saying it's overweight. We have 16 saying it's a hold. We have 1 saying underweight, and then 0 saying sell, which has actually changed over the last couple of months. We've had someone, one of the analysts here on Wall Street Journal saying that it was a sell, and so far that person has either moved up to underweight or moved somewhere in here, as they basically moved away from trying to sell the stock. So here we still have, what's interesting, a low price target of 150, a median price target of 215, and then a high price target of 308.80. With an average price target of 218.81. So when we plug that in, the 218.81, we only have a 22, almost 23% return, which still is not bad at all. If you think about it over the next year, Meta getting up to 220, which again is not a very huge move, but to return 22% over a year period, that would still be a fantastic return. So overall, personally, I do love Meta stock. I like the financials behind it. I like the fundamentals behind it. I like a lot of their growth potential. I made a video about it in the past, but I think they have a lot of growth potential in terms of Oculus and where that's headed. They are the #1 player in virtual reality, which is absolutely insane, especially when you think about where virtual reality and augmented reality could be going in the future. So overall, I am long the stock. I do own a fairly large position for my portfolio in the stock. So take everything in this video with a grain of salt, make your own decisions, make your own investment decisions. But if you did like the video, I would ask that you drop a like down below. And if you want to see more videos like this one, make sure you hit that sub button. And as always, have a wonderful rest of your day.